What's going on, everybody? Welcome into the Thursday, March 13th, 2025 edition of the Daily Energy Newsbeat Stand-Up. Here are today's top headlines. First up, South Dakota bans eminent domain for carbon dioxide pipelines. Absolutely love to see it. Next up, Trump tariffs threaten U.S. oil refiners. Next up, U.S. LNG's Kingmaker status has an expiration date. We'll move abroad here. India plans coal trading exchange as domestic supply soars. Next up, and finally, this is according to a report by Drewry, more than half of the steam LNG carriers to be scrapped by 2030. I will then take over and talk about oil and gas prices. And then really the crazy news yesterday, Scott Sheffield decided to drop a bomb on the U.S. oil industry. Pioneer out of tier one inventory. We will cover all that in a bag of chips, guys. As always, I am Michael Tanner, joined by Stuart Turley. Where do you want to begin?
Well, let's start with Sheffield. No, I'm just kidding. That was a great story. I was like, holy smokes, Batman. South Dakota bans using eminent domain for carbon dioxide pipelines. Michael, this is part of a $9 billion, 2,500-mile pipeline project. This is almost like Keystone Pipeline for transport CO2 capture from 5 Midwest states to an underground storage spot in South Dakota. It's now going to be a problem.
Yeah, absolutely. Oops. I think it's interesting. I did not know that you could ban eminent domain because eminent domain is basically the way for the government. It's interesting. How does the mechanics of this actually work?
That I don't know. I'm going to have to dig into it more. This is out of the article from the Daily Caller. But when you ban eminent domain as a governor, you say that it is no longer a tool in his tool belt. That's a pretty big deal. I mean,
yeah, rarely do you see the government lessening its power. So it's a great, I love it. And I think it's great. I think there's a room for eminent domain in certain areas. Do I think carbon capture pipelines are something that eminent domain should be used for? Probably not, but we would all agree that highways, we should probably be able to have eminent domain to build a highway. So there is a middle ground here.
Oh, there is. And the eminent domain if Secretary Granholm would have been in another thing, she had a plan for eminent domain for a gigantic swath of farmland that would have been horrific. So
yeah, I love this quote. I love this quote from the article. Your Green New Deal boondoggle, your lawsuits, your threats, your intimidation against our peoples, our countries, our grassroots commissioners are not welcome here. And that's according to Republican South Dakota House Speaker John Hanson.
Yes, in Texas we call it boondoggle, not bondoggle.
Boondoggle. Well,
let's go to the next one. Tariffs, Trump's tariffs. Now I can't speak. I'm laughing too hard. Trump's tariffs threaten U.S. oil refineries. Michael, you had a point yesterday when we were talking, or Monday. Trump tariffs are on, tariffs are off. Trump, I agree with you on that. President Trump's new tariff. Did I just agree with you? Sorry about that. President Trump's new tariffs on energy imports from Canada and Mexico are expected to significantly impact U.S. refiners, particularly those in the heavy crude. Michael, Sunday, I believe it was, or Monday, President Trump told Chevron to get out of Venezuela. And that is a big deal because they were 220,000 barrels per day of production out of heavy that we need. We really need the heavy oil sands. And this article does a great job on it. The 25% tariff on Mexican crude is even more significant. The U.S. imported about 625,000 barrels per day from Mexico in 2024, mainly heavy Maya crude destined for Gulf of America, Gulf refineries. But I think that the tariffs and the right sizing are going to be a short-term pain. He's going to get it figured out. But till then, we really need a Canadian heavy oil. Oh, yeah, Biden wiping out the Keystone Pipeline would have been nice to have right now.
Yeah, I think the problem is with the tariffs on Canadian oil is that that's not going to raise oil price. Everybody's like, oh, well, oil prices are going up. No. just gas prices are going to go up because the margins that these refiners are making are about to get eroded. So if you're in the oil industry, it hurts you double. One, your prices don't go up. And two, you got to pay more for gasoline and all of the inputs that come. So it is interesting. I think I agree with this article, and it points out the fact that we're just going to have to accept this as a price increase as a consumer standpoint, because the refiners aren't going to stop buying Canadian crude oil. They're going to take that 10% increase, and it's going to get passed on to you, the consumer. So I would expect to see gas prices rise in the future. It's why, I think tariffs are good in certain areas. I don't like to say a blanket statement for everything, but you cannot deny the fact that at some level, tariffs always get passed down to the end consumer. No corporation is going to just absorb a 10% price increase over the long term without somehow passing it down to the consumer. So I do think this will be interesting to see how long this stays. We've seen the economy not do so well in the past 2 weeks. Trump's come out yesterday, and Scott Bessent came out yesterday and said that if a recession is needed, then that's what they're going to do. Again, maybe that's true. But then we've got to all be able to live with that short-term pain.
Oh, yeah. Let's go to the next story here. U.S. LNG Kingmaker status has an expiration date. This was out of oilprice.com. I thought this was a pretty interesting story. And LNG is now the cool kid on the block, is essentially natural gas have been super cooled to negative 260 to 162 Celsius. That's 260 degrees Fahrenheit into a liquid that's easy to transport around the globe. But Michael, here's the thing. The number of ships, trucks, and other things that are using LNG, I've been watching the tanker builds and everything else. It is exponentially growing. The demand for LNG is going to be there. Take Europe, for example. Once addicted to Russian gas, the continent was left scrambling after the 22 invasion. By 2023, U.S. had become Europe's top LNG supplier. But is it going to be a long-term thing, or is it going to be a short-term? I think it's in for a long-term. The last paragraph, Michael, gas-fueled future for now. This is what she says. For all the hype, U.S. LNG reign as a geopolitical kingmaker has an expiration date. Sure, the world's hungry for energy, and energy gas is cheap and plentiful, but energy transitions happen in waves. America is the undisputed heavyweight champ of natural gas. And as long as the world keeps buying, U.S. producers will keep shipping. The only real question is whether or not the boom lasts. And I think the boom is here not to stay. I think the boom is here until technology changes. And I think that is going to be the big deal, because right now, this goes into our other story with the ships. The ships have got to change and get off of diesel, get off of the heavy sulfur fluids in order to stop polluting. And LNG tankers, cargo ships, bunker ships, it is becoming a huge, huge market.
No, it's very true. And I think the hard part, that we're gonna realize is that, the infrastructure investment needed to make ourselves an LNG player, moving forward from an international perspective, is got to be huge, extremely relative and you're competing with countries like Qatar, Saudi Arabia, who have basically unlimited budgets relative to what we have. And in a time of Doge, the real question is, are we going to have enough to make these investments from the standpoint? I think that remains to be seen.
Well, that brings up, I've got about 9 articles I'm working on right now. And in 2024, we had 345 shipments totaling of each one. There's millions of dollars of each shipment that goes out. This is President Trump's trade tariff ace in the hole. But how much can we ship? What is our growth rate? What are because it takes billions to build a new LNG train, and how much is it going to be able to? And then how many ships are we going to have and everything else? So there is a huge project I'm working on this. So it'll be a lot of fun. Let's go to the next one. India plans coal trading exchange as domestic supply source. One thing that you and I laugh about, Michael, King Coal ain't dead yet. It's the old Monty Python skit. I'm not quite dead yet. He's laying there with an arrow in his chest. Oh, I'm not quite
I'm not
dead
quite
yet.
dead yet.
India's coal ministry is proposing a new coal trading exchange to meet increased domestic coal production and facilitate competitive sales. India is not going away from coal anytime soon. Neither is the rest of the world, and neither is the United States. We just had a new coal plant licensed or approved in Wyoming this past week. So I think you're going to see new coal coming on board. But the difference between the US and China is the US plants are going to have great scrubbers and new technology to keep that coal clean.
Yeah, I mean, I think it's real interesting what India wants to do here with this coal trading exchange. I mean, it goes to show that, cheap energy will always win in the future relative to what other people want. We might be trying to push paper straws down our throats, but they're opening up coal exchanges in India. So I don't know what that means.
I think we're going to see more coal in the United States, but the difference is the United States will do it with really, really good scrubbers. Let's go to this last story. Drewry, more than half of the steam LNG carriers to be scrapped by 2030. This is very, very important with the President Trump opening up the shipyard group in the White House to seek investors in the United States. According to Drewry report released last week, modern LNG carriers will replace these carriers with high deliveries scheduled between 2024 and 2027. As the steam turbine carriers come off the charter, they will become idle with no reemployment opportunities. The dark fleet will use them. However, I've got a different take on this. I think that if President Trump wants to listen to this podcast, we need to tell him that those shipyards also need to take advantage of a deconstruction or recycling shipyard to strip those rascals down, reuse that steel, redo it, and then put those into the new technology. That would be incredible and coincide with getting rid of the Jones Act.
No, it would. You've been on this Jones Act for a while now.
I hate the Jones Act.
No. We got to get rid of it. Got to get rid of it.
But does that make sense? I mean, this is a huge, huge market, and you're not going to remain king in LNG unless you can guarantee U.S. flagged tankers.
No,
oops.
You've got to, and as the supply goes down, price to ship goes up, and it just makes this LNG way more expensive.
Oh, absolutely. And if you can control the entire supply line, and speaking of that, we've got some great sponsors that understand the entire natural gas, LNG to power plant portfolio.
It's an amazing transition. Let's go ahead and pay the bills as we speak. As always, guys, news and the quote-unquote analysis you just heard is brought to you by the world's greatest website, www.energynewsbeat.com. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. You go ahead and hit that description below. All the links to the timestamps, links to the articles. Check us out on Substack, theenergynewsbeat.substack.com. Go ahead and give us a follow. And if you're so inclined, go ahead and sign up for a paid subscription. It's truly the best way to support the show if you are a listener. And we appreciate each and every one of our followers there. As Stu mentioned, we do have great sponsor of the show, Reese Energy Consulting. They again, make it possible for us to do what we do here. They are experts in the natural gas and LNG space. If you're an upstream company who needs help with your oil and gas marketing, if you're a midstream company needing help designing a new LNG facility, if you're trying to look at how to enter the LNG market, whether you're on the infrastructure side or whether you're on the trading side, and if you have crude oil or natural gas that you need to sell, Reese Energy Consulting, guys, check them out. Link in the description below. Help that out. And as always, guys, invest in oil.energynewsbeat.com if you want to become Billy Bob Thornton, the best place if you're looking to get ahead in your 2025 taxes, score a little bit of dividends, and diversify your portfolio. And as always, become Billy Bob Thornton from Landman. Stu, but let's jump over here We're recording this kind of early afternoon here, so markets are still open, but they're up so far about a half a percentage point in the S&P 500. NASDAQ jumped about 1.4 percentage points. A lot of that's because Tesla's swinging back heavily after getting pounded the last 3 or 4 days. 2 and 10-year yields up 0.8 of a percentage point and 0.4 of a percentage point, respectively. Dollar index flat. Bitcoin, $82,000, basically flat. Crude oil up about $1.50 to 67.75. That's about 2.2 percentage points. Brent oil basically flat at $71, and natural gas tumbles 7 percentage points to $4.12. So natural gas guys go from happy to sad. It's a tough business to be in that natural gas game. Myself, when we go look at what's driving oil prices, it's mainly tight U.S. supplies, with the fact that we have seen crude oil inventories come back. The EIA did drop their crude oil inventory report this morning, and they said that crude stockpiles rose by about 1.4 million barrels, which is actually less than the expected 2 billion barrel build that we saw the API drop yesterday. So remember what goes on there. We also did see gasoline inventories drop by about 5.7 million barrels versus the expectation of a 1.9 million barrel draw. So pretty incredible. Distillate stocks dropped a lot more. Good friend of the show, Josh Young, said this week the oil build was smaller than expected and gasoline and diesel draws were larger than expected. This evidence stronger demand and could see oil prices rise as a result. He was right there. We did see inflation, some numbers come out after U.S. core CPI increase less than expected in February, so that's great. We have seen a pickup in the last few days of a potential Russia-Ukraine ceasefire, but obviously with fears of recession, that's going to hold, obviously, prices and any growth down. But so, Stu, where are you at with the recession? Is it coming? Should we be worried? Should we not be worried? What do you think?
With Doge pulling out as much printed money as they can, that is a naturally occurring thing that will help inflation. Getting chickens to rebreeding and everything else, egg prices will come down naturally as long as they don't kill them. I think that if there is a recession, it was teed up by the Biden administration's overprinting of money. I think that I like what I'm seeing with Chris Wright, Lee Zeldin, and Doug Burgum on all of the energy policies. I think we will see lower prices. Will we hit President Trump by saying we were going to have half the prices? I think in the red states, we will come close. In the blue states, rot's a ruck.
Yeah, absolutely. Absolutely. The only other thing I saw yesterday, so we have to talk about this, Scott Sheffield on CNBC. Wild? Now, we can't play the video because YouTube will take it down. You won't be able to watch it. We'll lose the 30 cents or whatever that we get per video. So we guys, we're on a slim budget here. We had all we can take. But basically, he goes on, Scott Sheffield goes at a CNBC interview there at CERAWeek, okay? He joins Power Lunch. And the quote, Stu, is unbelievable. I'll give you, basically the quote was, at Pioneer, we realized we were out of tier 1 inventory and close to being out of tier 2 inventory. He goes on to say tier 1 inventory will be done by 2028 and they'll be out of tier 2 inventory by 2032. What? Unbelievable. This is from the same guy that 4 years ago was quoted as saying Pioneer had 100 years of inventory. Oh, how the turntables. This guy just nuked all over Exxon stock. I mean, it's pretty funny. I mean, throw out, whether or not he's right or wrong. This is a revenge play for him, in my opinion. This is him looking at ExxonMobil and saying, oh, you don't want to stand up to, for me when I'm getting left off your board, when the FTC is coming after me unfairly. Well, guess what? I'm going to go tell everybody your $63 billion acquisition was for 4 years of inventory.
Wow.
And then
that's an interesting
take on it.
The
tier 2 stuff, which sucks because, trust me, there's a reason why it's called tier 2 and not tier 1. It's because it's off the beaten path. Oh, you've only got bad stuff until 2032, and then you're absolutely cooked. I was shocked when I read this, Stu.
There is a huge reason that there is a gigantic push for the Gulf of America drilling right now. Huge.
But what's that got to do? Yeah, because Exxon realizes they got fleeced with Pioneer. I mean, is this the new XTO?
Could be, but what I'm saying
Unbelievable.
is that the amount of drilling activity, rigs, seismic activity, and everything going on in the Gulf is just going nuts.
I mean, that's like me coming out and saying with this show, we've only got about 2 years left of good shows, and then it's going to fall off a cliff.
Yeah, Rots of Rock finding a sponsor at that point.
Yeah, exactly. It's going to be rough finding people to pay. It's just unbelievable. No, we've got 100 years of good shows left.
Yeah, we got 2 million people listen to us already. So we have 8.5 million transcripts read. We're
Now,
good for
on the
another
other
15
hand,
minutes.
I
Yeah.
think what Scott Sheffield said was the quiet part out loud, was that there's not as much great inventory left as people thought. And without some technological change, without some new innovation, without something that is a complete game changer like horizontal drilling or the modern frac, it's going to be hard to find more shale oil. Now, I tend to fall in the camp of low prices and low margins leads to innovation.
Right.
There's the idea of creative destructionism, that industries, when they tend to die out, new people come in and find ways to revive them and increase those margins because now there's opportunity to do so. But this doesn't bode well for anybody trying to sell right now. I mean, he really did a number on the M&A markets right now. I mean, Double Eagle and the boys over there must be thanking their financial advisors for making them sell out when they did, because if they were in the midst of negotiations right now, everybody would be reevaluating every deal that's in process right now. They're basically, it's DEFCON 1 in these war rooms of them trying to convince their buyers. No, I promise you, we've still got 10 years of inventory. I mean, it's unbelievable.
Right. But that still puts more importance on Alaska and the Pennsylvania area in the Marcellus and those kind of areas. I'm of the aspect that there is plenty of oil out there. It's all financially whether or not it's accessible or permittable, but we are still short $4 trillion of regular CapEx investment in order to maintain normal decline curves, Michael. I'm bullish on oil.
Yeah, I'm not as bullish as you. I would be hard pressed to see $80 oil this year. I don't think we will. And I think we're going to have to learn to live in a lower price environment, which the oil industry can. I think you're going to see a swing back from 4-mile horizontal, triple fracked wells to something that's a little bit more conservative plays that I think you'll see conventional oil come back into swing a little bit. One of the things I love that we're doing with Pecos is that we've always lived in the conventional vertical space, meaning we're set up for times like this. But it's pretty unbelievable. So
And we like 32% returns, by the way. Just thought I'd share that.
Yeah, great returns. Last show of the week, Stu? What should people be worried about going into the week?
I'll tell you, just keep your head on a swivel. Enjoy the ride. Do not take what people say too seriously and hug your neighbor, even if you hate them.
And that's tough when I got to work with you every day. But that is okay. Well, all right, guys. Hey, we appreciate you sticking with us through the end of the week, guys. Have a great weekend. Who's coming out on the pod tomorrow?
I don't know yet. I've got several of them teed up. One of them was from Nape, and then we've got like 5 others. Just interviewed John Rogers. He's a friend of the show. He's been on a couple times. We've got a
Who's he
bunch
with
of
now?
Do what?
Who's he with now?
Centrum. They are a downstream chemical company, and it was a great podcast. So pretty cool.
Absolutely. No, we love John Rogers over there. We appreciate him. Saturday, you'll get the weekly recap. We'll give you a break on Sunday, and then we'll be back in the chair on Monday. As always, guys, for Stuart Turley, I'm Michael Tanner. Appreciate you guys. We'll see you next week.